Welcome back to my YouTube channel, where we talk about stock market investing. Today's going to be a little bit of I guess, one of those rarity videos because I rarely put videos out on Palantir. Um, but they did have a lot of filings that came out today, and I saw a little bit of a little stock price movement on the downside. As you can see, we're down about a little over 4% today, and now we're down in the after hours. Um, I think there's a little couple things maybe putting this thing or pushing this price action down, um, maybe involving the filings, or maybe a little bit about Nvidia earnings, or maybe a little bit about both. It's hard. Sometimes it's hard to tell why a stock is going down. Other people will say, "Oh, it's valuation, this and that." Well, I mean, it's nobody really knows for sure. Sometimes it's pretty blatant. Reason why everything's going down. Maybe there's a bird flu or something happening. But I want to talk about the filings, what I saw, and dive a little bit deeper in there. All right. So let's go. Here we go. So we had a bunch of sales of securities. Pretty much Alex Karp, some directors. I saw Sean sell some stock in there. Um, but let's look into this. The 10K, I didn't really see too much. Just typical 10K. But what might be having the community getting a little bit crazy about this is this S8 filing here, which pretty much states there's 5% dilution coming. All right, and this is a what do you expect? This is a tech company that's a growing tech company. All right. Now, I mean, 5% dilution. This is an incentive plan that was established years ago. In fact, this was established in 2020. All right. So, I mean, it is what it is. Now, how does this affect the stock? What do I think about it? Does Palantir have an issue with dilution and this and that? So let's get into it. All right. Um, so I pulled up their last earnings, or actually, let's go back to the financials. All right. Let's do a little sniff check on some stuff here. Let's look at cash flow. All right. Let me see here. Net income, it's positive. All right. Go in the right direction. Okay. And it's been going the right direction since 2020. All right. Let me see here. Cash flows. Cash flows are exploding. Okay. The free cash flows are exploding. Now, I want to emphasize something here so that people understand how I view this and how I view this equity and cash flow. All right. I don't view those free cash flows as mine as the shareholder. In fact, I'm not concerned about the like to me, what I'm concerned about with Palantir is revenue growth and net income growth. All right. The cash flows are something completely different. All right. So if you're an investor that's investing purely for these free cash flows into Palantir, I mean, I don't know about that. All right. The cash flows will come in later for the shareholder, as far as that goes when the company's at a different phase. But right now, it's about net income and it's about revenue growth. All right, at least for me. Okay, now 5% dilution. Let's go to earnings. We'll go to let's see what they've been doing here. Let me see here. Here's their earning history. The market has been rewarding them even when their EPS is in line with estimates from Wall Street. Okay. Typically, you get it in line from, with your estimates with Wall Street. People consider that a miss, but Wall Street's overlooking it, and company's been going up. All right. The stock price has been going up. Now, I think that trend will continue as long as they stay within line. They don't beat, they don't miss. They're just in line because they're barely profitable. Maybe Wall Street's giving them a little bit of a pass. All right. They're happy. Okay. So they did 8 cents in EPS. When it comes to dilution and earnings, we need to be looking at EPS. All right. Let's go to earnings estimates. We'll take it quarterly. As you can see, our next 3 quarters for Palantir, analysts got them doing 8 cents of EPS. All right. Now, if Palantir, if the management they guide differently, this EPS number could change. If they guide up and analysts raise this EPS, they better hit it. All right. but But for now, it looks like 8 cents per quarter for the next 3 quarters. And these next 2 quarters still representing over 50% growth on their EPS year over year. So that looks phenomenal. All right. Um, that kind of outscales 5%, 51% or 51.98% growth in year over year EPS, 5% dilution of shares outstanding. Yeah, I mean, okay, so that's one way to look at it. That's how I kind of look at it. As long as the company is growing and scaling to be able to absorb the 5% dilution, I mean, we're gravy. I mean, it's energy. Okay, wealth is energy. All right, you have to look at the total concept of the company and the financials. All right, the health of the company. All right, that takes time. People don't usually get it, and a lot of it's forward looking as well. And but it just takes some time. Now, going back 5%, this is year over year, and I mean, I notice that this is a Delaware incorporated company, so maybe Alex Karp's F shares ain't as strong as they should be. I mean, I don't know. All right, moving on. All right, that's a topic for another day. Now I'm pulling up their past earnings slide deck for their read ahead or what have you. Um, the cash flows are, the operating margins are good. All right, let me see where their guide is. I'm trying to look for their. Bear with me. Okay, here we go. Here we go. All right, so for Q1, they're they're expecting these are the operating margins that they're the operating income they're expecting. um I mean, adjusted free cash flow, I don't know what that means. I mean that can mean a lot of things. All right, when they say adjusted, I mean, I don't know. I mean, I would manipulate some cash flows, I guess, but honestly I don't really care about the cash flows. What I'm getting at is, let me see here, their cash from operations and adjusted free cash flow. I mean, we're seeing dramatic margin increases. In fact, a lot of the numbers across the board here, their customer counts are growing. Everything is pretty much what I'm stating is everything is going in the right direction. Okay, if everything is going in the right direction, they're growing their revenue. Their operating margin is increasing. Their net income will go to their profitability. We'll talk about margins. Their their margins were, they're all formulating to be, really good margins. They're improving. The margins are improving. The company is scaling and becoming bigger. It can absorb the 5% dilution on the shares. Um, now, if this was now I'll admit, if this was a $10 share stock and they're diluting 5% and they start missing on EPS, okay, I got a problem with that. But I mean, that's not the case. All right, we're up there. We're a little up there in valuation. If they want to issue some shares they want to issue 5% of outstanding shares at this valuation to do stock based comp, and the company is growing this quick, or we're seeing this much improvement in growth, so be it. It's just another function of the cost of doing business. All right. So let's look at my position and see how I view this. Because, I mean, let me see here. All right, here we go. So this is my. Let's see if I could zoom this out a little. See if you can see that. All right, so we're up 200% on our over 200% our position. We've 3x this thing. All right, I invested a little over 10 grand. It's over 30,000 now. I mean, the company has grown my value. The value of my shares has the price of my shares has increased, and the value of my shares have been increased. When I owned the shares, they weren't even profitable, as you can see. All right, here's my excuse me. Here's my total buy lots. The last time I bought this stock was April 24th of 2023, and I have not sold one share. All right, so once these companies take off, I kind of let them do their thing. I'm not really as much in the weeds with investment theses and so forth. I follow up with them every so often, but I let the management do their thing. All right, once they take off enough. All right, whenever the filings come out, I read them. I look at I go into. I look. I'm there for the earnings reports and this and that. But I don't lose sleep over this type of stuff. All right. And I see, and once again, it goes back to my mentality. Once we get a 2x, it's more about a margin of safety. We're in this for the long haul. With that being said, um, you know, I just opened up my Patreon. Link down in the description if you're interested in. That's a brand new Patreon that's created. um, I'm going to be way more active on that thing. There's going to be more exclusive content on there and investment theses and just stuff that I'm planning on doing. So and you'll be able to take advantage of better promotions and deals and such. All right, that come out later on in the channel. That being said, I hope you got value out of this. Um, I wouldn't sweat it. It's just what it is. I think Palantir is still on the path to becoming a huge company. All right. And hey, comment down below what you think. All right. What do you think about the stock based comp? What do you think about Palantir and their valuation and so forth and their story and what have you? I'm curious to know. And if you want to see something else from my channel, I'm all ears. I listen to the people. But with that being said, thank you and have a good day and have good rest of the week.